Welcome to the housing market update for October 2024. We're seeing a rise in housing values, but the growth pace is slowing. Conditions vary across regions, with some cities experiencing declines, while others continue to see increases. Nationally, housing values rose by 1% in the September quarter, marking the lowest growth since March 2023. Melbourne, Canberra, Hobart, and Darwin saw declines, while Sydney's growth was minimal, indicating a diverse market landscape. Mid-sized capitals like Perth, Adelaide, and Brisbane are losing momentum, though they still outpace other capitals. Perth's values rose 4.7% in Q3, while Adelaide and Brisbane saw slower growth, reflecting a shift in market dynamics. Homeowners are increasingly looking to sell, with new listings up 3.2% from last year. This seasonal trend is typical for spring and early summer, but the current level of listings hasn't been seen since 2021. Vendor metrics are softening, with auction clearance rates dropping to the low 60% range. Homes sold by private treaty are taking longer to sell, indicating weaker selling conditions in the current market. Regional housing markets are also experiencing eased growth. The combined regionals index shows a decline from 2.3% in April to 1% in September, mirroring trends seen in capital cities. Western Australia, South Australia, and Queensland lead regional trends, while Victoria and Tasmania see declines. Rental growth is slowing, with the national rental index rising by just 0.1% in the September quarter. The slowdown in rental growth is influenced by reduced net overseas migration and rental affordability pressures. As household sizes increase, demand for rentals decreases, impacting the rental market dynamics. Adelaide's housing values rose by 1.2% in September, consistent with August's rise. Despite higher listing numbers, stock levels remain low, favoring sellers and keeping the market competitive. The immediate outlook suggests further growth in housing values, albeit with a gradual loss of momentum. Factors like improving sentiment, tight labor markets, and potential interest rate cuts could support this trend. Household balance sheets are benefiting from tax cuts and energy rebates, potentially boosting borrowing capacity. However, constraints on new housing supply due to builder challenges may keep prices elevated. An undersupply of newly built homes will likely maintain housing prices and rents. A potential interest rate cut could enhance borrowing capacity, encouraging more households to consider buying a home. Despite potential upsides, housing remains unaffordable. The income required to service a mortgage is at record highs, and the value-to-income ratio is near peak levels, challenging affordability. For affordability to improve, either mortgage rates or housing values need to decrease significantly, or incomes must rise substantially. Current metrics indicate a challenging environment for potential buyers. A rise in real estate listings is expected as vendor activity increases. Higher stock levels provide buyers with more leverage, potentially softening selling conditions and cooling the market. The increase in advertised supply is beneficial for buyers, but poses challenges for vendors due to increased competition. This trend could lead to further softening in selling conditions. As the spring selling season progresses, it's crucial to monitor market trends. Buyers and sellers should stay informed to navigate the evolving real estate landscape effectively. For ongoing updates on the property sector, be sure to check our blog pages. Staying informed will help you make better decisions in this dynamic housing market. Thank you for joining us for this housing market update. We hope this information helps you understand the current trends and make informed decisions in the real estate market.